We are effectively in a recession. And when you talk about recession, we are in a per capita recession. How do we know this? The per capita GDP is down by 2.5%. Consumption is down by 3%. The only reason the economy right now is above zero is because we have 1.2 million people that have entered the country through immigration. Now, what's interesting is that things are shifting. Things are starting to change. Insofar as inflation is concerned, inflation, if you were to take out the mortgage interest today, we're sitting at 1.5%. And now if you look outside, you can see that it is beautiful, it is sunny, the days are now longer. And for anybody that's experiencing multiple offers, we're seeing those stories, the headlines where it's 30, 40, 50 offers now in some instances, which is pretty interesting. Things are in full swing now from a multiple offer perspective. And if you look at the inventory, we're looking at pre-construction, and we know from an inventory perspective, last year, we sold 13,000 pre-construction units versus a year historically where we would sell between 25 and 30,000 units. That's what we should have sold. Why this is alarming is because many of the builders that need to hit 75% to actually get funding to start building their properties may not hit those targets, which means out of the 13,000 units that are sold, many of those projects will never actually hit the market because they're not going to hit their funding requirements. And so I can't reiterate this enough. Who you're purchasing pre-construction from in this market is more critical now more than ever. If a builder doesn't hit the 75% threshold and they can't get funding or they don't have the funds to build on their own, we are in troubling and tumultuous times. You have to remember that when I've been talking about housing shortage and housing crisis, I've been saying for us to be the average of the G7, we need to build 1.8 million homes today. The stats that I'm giving you today are from a Rotman roundtable, and the reality, according to the people on that panel, is that we're actually 5.8 million homes short. And if our capacity to build units is between 45 and 50,000 units a year, it'll take us 100 years to build that many. Now, context is important. If you look at the US right now with a 350 million plus population is short 2 million homes. We're short almost 6 million homes. And for every immigrant that the US is taking in, we're bringing in 6. So it's a 6-to-1 differential. And what this tells you, why this data is important, is because it tells you that things are about to get real. Our peak as a country in terms of building units, inventory, and output, the peak of our building was back in the 1970s. So you take all of these factors into consideration, whatever blip we've seen, not only are we expecting to recover it, we're probably going to see it blow out even further. Because if we're in fact 5.8 million homes short and we need these homes by 2030, there's no chance we're going to catch up. We don't have the tradespeople. I've been saying this for countless weeks in the past. It's about to get real. Now, let's jump into the weekly insights. So you look at supply and demand on the weekly side of things, and what you can see here is that the number of listings continues to grow. That's typical, in my opinion, for this time of the year. As the days get longer, as there's sunshine, as it gets warmer, more and more sellers are entering the market. You have to also keep in mind that there is pent-up demand not only on the listing side, but also on the buying side. Anybody that didn't enter the market last year because they were taking a wait-and-see approach, we're all acclimated to the current interest rates. We know that June is probably when the first rate decrease is going to happen. We know that we've hit rock bottom and it's only up from here. So you take all of these elements into consideration, and we can predict that this is going to be a very hot spring and summer market. It's already looking like that. Now, on a week-over-week basis, when we start extrapolating some of the data, number of listings is up. On a trend visualization basis, number of sales are also up. And I always say this every week, the number of sales reported for March 9th was 641, but I suspect that there's a cross-section of transactions that haven't been reported. Despite that, and we'll know next week for sure, because we saw that last week. If you guys go back to last week's Market Minute, this was also on the decline. But look, it's already lifted. So taking those adjustments into consideration and looking at the months of inventory on the freehold side of things, we are currently at 2.4 months of inventory. And that's based on an understanding that we had 641 sales. I think it's probably more. We'll know for sure next week. Last week, it was 633, but if you actually look at it, it was actually 806. So if I adjust this very quickly, you can see we're back at 2.11 months of inventory. So the gap is closing. Anybody that is talking to a prospective buyer who's saying, I'm waiting for the rates to come down, you may get a better rate, but you are going to compete and you're going to overpay for the property. It is inevitable in about 6 weeks that this is going to shift from what I can tell you. So supply and demand continue to go at the same pace in tandem. The numbers keep filling in, so they keep changing, but it is a very strong seller's market on the freehold side of things. Let's look at the actual analytics now. If you look at the average ask to sell ratio, you can see that we're just trending up, 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 up every single week. So this further confirms what I'm saying about us seeing more and more properties go over asking on multiple offers. In terms of the average days on market, which again, you should not confuse with the months of inventory. Months of inventory basically tracks if no new listings hit the market, how long would it take for the current inventory to get acquired? So 0 to 4 months of inventory, seller's market, 5 to 6 months of inventory, balanced market, 6+ months of inventory is a buyer's market. We are in a strong seller's market right now. It's about to get worse from what I can see. And if you look at the average days on market, we're at 15 days on market now. So if you look back at last June, we're pretty much on par with what we were seeing then in terms of days on market. And that was a summer month. Despite the rate increases and the rate holds, it is very, very strong. In terms of the average sale price on the freehold side of things, it's been a steady upwards trend. So we are back to almost 1.4 million on average for GTA properties that are freehold, not including Halton. So the analytics are very clear. If we have a rate decrease, which we expect to have, because the Bank of Canada is overshooting as per Benjamin Tall and all of the panelists, this is about to get real. This summer is going to be very interesting. On the condo side of things are a little bit different, but it's because, in my opinion, we're seeing more inventory. More of these projects are going in for interim occupancy. People are trying to flip them. There's more influx in terms of inventory, but even with that, we're still sitting at about 4 months of inventory. Now, if I go back and I correct the number of sales here, and I change this to 333, we are sitting at 3.3 months of inventory. So as these transactions continue to become reported, things continue to shift as far as our metrics are concerned. So number of listings is up, number of sales is kind of balancing out, but it's not a material divergence where you're seeing a huge correction in terms of prices. And so if you look at the average ask to sell ratio, we're still trending. It's just inching upwards. We're almost at the 1 mark, which tells you property are selling close to asking, not over asking, maybe a little bit over asking, but we're on par. If you look at the average days on market, that's been on a steady decline as well. You look at the average sale price, it's doing this up and down, but it's also because, again, supply and demand are not theoretically going in different directions. They're staying about the same on average, which is why we're seeing these weekly fluctuations. If you take this and extrapolate this monthly, like I showed you previously, it's looking like we've hit the dip and it's starting to come down. Now, what's interesting about the dips and what we're experiencing is that it's going up, it's going down, it's going up, it's going down. But relative to where we were previously, if I go back and extrapolate this a little bit further, you can see that even though we're seeing this, it's going up and then up. So it's inching upwards. And as this inventory continues to become acquired, as consumer confidence continues to be bolstered on what we're seeing, as the weather continues to improve, I think things are about to get real. On that note, so anybody that hasn't seen the roundtable that I posted, I've mentioned in the closed Facebook group that there's very few sessions that I attend personally each year. And this is one of those sessions where I don't think you should miss it. So if you go in here, you've got the link. Please watch this session. It'll give you incredible insights. It'll give you a bunch of talking points for anybody that is having a hard time understanding what's happening in this marketplace, what's happening from an economic perspective, from the bank's perspective, from a builder's perspective. This was a crazy panel, and you can watch the recording. It's only valid for another 20, 25 days. You're not going to want to miss this. So I've pinned this to the featured section of our closed Facebook group. Go in and check it out. It'll give you a ton of insight. Some of the insights I gave you in the beginning of this call were right from there. And I think if you understand what's happening, you'll be able to talk to clients at a very high level. Does anybody have any questions or any feedback or anything to add to that? All right. If not, I've added a property walkthrough for Mississauga for Vida's property. If we can get anybody who's interested to quickly RSVP, we want to know by Wednesday if we have at least 5 to 10 people that are going to show up so that we can proceed with that. So anybody that's looking for a property tour or walkthrough video, please go in and RSVP as soon as possible. I will see you guys later. Bye for now.